Okay, great. Let's get started. We're at 12:02, and we'd like to begin. So, everyone, good afternoon. My name is Ian Andrews. I'm the Executive Director with LakewoodAlive, and we are really thrilled that you're joining us today. We had 67 folks sign up, and we are almost at 50, so that is a great turnout. And we're going to jump right in. This is being presented in partnership between LakewoodAlive and the Lakewood Chamber of Commerce. LakewoodAlive is a nonprofit community development organization whose mission is to foster and sustain vibrant neighborhoods. And we work with small businesses to try to connect them to resources and do so in part through partnerships that we have with our friends at the Chamber of Commerce. So thanks to Patty Ryan and the team at the Chamber for being such great partners, along with the City of Lakewood. You can all know that the three organizations are working hand in hand to try to be supportive of small businesses as much as we can during this pandemic. So let's jump right in. The agenda today will run through some various programs briefly that LakewoodAlive, Chamber, and City have been working to try to bring to bear. Panel introductions, we'll go through our presentations and then questions and answers. I would ask folks, if you have questions, please go ahead, type them in the little thought bubble. My colleague Allison Urbanik, who is our Housing and Internal Operations Director, will be monitoring the questions and ask the panelists at the end of their presentations, and then again at the end when we will have just kind of an open dialogue. So while you won't be able to audibly ask questions, please type your questions in. We want this to be that virtual dialogue, if you will, where we can hopefully answer some of the burning questions that you have. In terms of local programs supporting small businesses, as I mentioned, the three organizations, the partnership could not be stronger. And I think that really is a testament to everyone working so well together, and we hope that's to the benefit of Lakewood. We have the city was able to launch the rent relief program, of which almost $180,000 went out into the community to support small businesses to help cover a month's worth of rent. We've also partnered to be able to provide financial programs and resources like today, and talking about the resource of the expertise of folks who have knowledge and who have the understanding of how to oversee programs like PPP. We also worked with the mayor on creating a small business task force, which is about 12 to 15 people who are meeting weekly to talk about ways that we can support the small business community. And coordinating merchant associations. LakewoodAlive works directly with the Downtown Lakewood Business Alliance, Uptown Lakewood, and West End. Patty Ryan and the Chamber also work with all three. So we're all working hand in hand, and I think that's something we should be proud of. Navigating these challenging programs and just understanding what's coming out from the SBA, from unemployment, and then advocacy with public officials. Patty and I are showing up to the virtual council meetings, their committee meetings, and constantly communicating with members of council, the administration. We have a really great partner in the mayor and in members of council, Caitlin Milius from the planning department. So you've got a good team going to bat for you every day, trying to figure out how we can be helpful. We're going to transition now to some introductions, and I'm going to work to unmute our panelists. So we have Terry Vincent, who is a partner with Brouse McDowell, and he also is the chairman of the the Lakewood Chamber of Commerce board. So Terry, if you wouldn't mind just saying a few words.
Thank you, Ian. I'm really happy to be here, especially on behalf of the Chamber of Commerce. Both Ian and Patty have worked tirelessly to help the Lakewood community and the businesses keep afloat, and I'm happy to be part of that process.
Thank you, Terry. We appreciate that. Our partners at First Federal Lakewood, and I have to say First Federal has just been an incredible partner as our hometown bank, if you will, in bringing to bear an emergency bridge loan program of trying to get money out on the street. You'll hear more about that. And also being supportive in so many ways with PPP for banking customers and those who don't bank with First Federal. So we've got a gem in our friends at First Federal. Paul Kapka is representing First Federal with Tom Frazier, who was, I think, in 3 meetings at once. Paul is a senior VP and chief credit officer. Paul, if you wouldn't mind saying a few words.
You bet. Thanks, Ian. I appreciate the introduction and very, very kind words. We're, of course, ecstatic to be working with the city, with LakewoodAlive, and with the Chamber on many initiatives, and the PPP is a perfect fit for our commitment to small businesses, to the city, and to the program. So we've been excited participating in it, and lots of good stories to share. So thanks, Ian. Appreciate it.
Great. Thanks, Paul. And Laskey Costello, an accounting firm. Will Costello is a certified public accountant. Their shop is right on Detroit, just to the west of the Taco Bell, between Arthur and Lakeland. So, Will, thanks for being here. If you just want to say a few words.
Yeah, thanks a lot, Ian. Thanks for having me. Thanks, LakewoodAlive and the Chamber of Commerce for putting this on. It's a great way to stay connected, and I think there's going to be a lot of good information for people that need it out there. So I appreciate it.
Great. Thanks, Will. So, folks, bear with me as I'm going to toggle in between. We have several different presentations. We're going to get started with Terry Vincent, who is going to give us kind of the overarching viewpoint of PPP, what he's seeing and hearing from his clients. So, Terry, please go ahead and take it away.
Thank you, Ian. Next slide. The number one pressure on small business owners right now is payroll. Whether it's a sole proprietorship, a one-person show, or a company with 500 or so employees, we've certainly felt the pressure. Maybe you've already stopped paying yourself, have laid off workers, or cut hours. The Paycheck Protection Program loan is meant to relieve that economic pain. The PPP, as it's known, PPP loan, was signed into law on March 27, 2020, and on March 31st, the SBA issued its guidance and sample application loan to be used by the banks. I'm going to give you a 30,000-foot summary of the details, and a lot of what I'm not saying is on my slides or will be presented by the other two presenters. Who qualifies? A small business with generally fewer than 500 employees that was in business on or before February 15th, 2020. This can be a S Corp, a C Corp, an LLC, a sole proprietorship, an independent contractor who reports his or her income on the Schedule C. It also includes certain nonprofits, tribal groups, veteran groups. The government tried to include just about everybody except for the larger companies. When obtaining a PPP loan, you need to certify that your business has been economically affected or that economic uncertainty make the loan a necessity. Now, this has been a bone of contention with the SBA, and they've honed down on this rule a little bit in the last week or so when you saw probably when the LA Lakers obtained a loan and it was determined it wasn't economically necessary for them to have the loan. The SBA started honing down a little bit. How much can I get? Generally, the maximum's $10 million. But the amount of that the business gets is based upon its payroll costs. Generally, the amount you qualify is 2.5 times the monthly average payroll cost. The average, you take your total payroll for the 2019 year, calculate on the 12 months, and then divide that by 12 and multiply it by 2.5, and that gives you an example. If your monthly average payroll was $20,000, you would qualify for a $50,000 PPP loan. Now, what's included in the monthly payroll costs? Generally speaking, salary, wages, commissions paid, payment of vacation and sick pay, parental, family, and medical leave, payment of retirement contributions, group health costs and premiums, state and local taxes that are assessed on payroll. It does not include, however, federal payroll taxes. It also doesn't include payroll costs for those making more than $100,000. It's capped. The amount is capped on the first $100,000 a person will be making. Now, what can I use? Oh, next slide, please. What can I use the money for? Generally, this will be covered by Will. So I just want to go through that slide real quick. Generally speaking, the SBA rulemaking has stated that 75% of the forgiveness request must be payroll costs, and that certain other expenses up to the 25% will be approved, such as rent, mortgage interest, and utilities. That rule seems to be widely understood. As long as the small business owners are spending 75% of their PPP funds on payroll, this rule won't frustrate a small business owner when it comes to time for forgiveness. Unfortunately, there's an additional restriction on loan forgiveness requests. Next slide. Generally, the forgiveness request penalizes small business if they do not bring back the same number of workers that they had before the pandemic. For example, if you were a small business who had 10 employees prior to the pandemic, and now after receiving your PPP loan, you only have 6 employees, then your loan forgiveness request will be reduced, no matter how much you paid, will be reduced to 60% of that amount that you paid. If the small business brought back 10 or more employees, then there is no reduction in the forgivable amount. In other words, small business who have kept or who rehire their entire workforce are rewarded, while those who don't will be punished. The fact of the matter is that many who bring back their workforce are those who have been hurt the most. The pre-pandemic period used to determine the number of full-time equivalent employees is either January 1, 2020 through February 29, 2020, or February 15, 2019 to June 30, 2019. The business owner can choose either period of time, and a smart one will choose the period with the lower number of full-time equivalent employees. Using the example of a small business that received a PPP loan of $60,000, that prior to the pandemic had 10 full-time equivalent employees, but has only retained or brought back 6 employees. Next slide, please. Over the next 8 weeks following their loan funding, let's go through that 75% payroll and full-time equivalent to see the amounts of the small business owner would be eligible to have forgiven. Total PPP loan, $60,000. 75% of the payroll cost applies to the PPP loan for 8 weeks. The amount spent on payroll, $30,000. The amount spent on rent, $4,000. The amount spent on utilities, $2,000. And the total amount spent is $36,000. Payroll cost of $30,000 represents 83% of the total qualifying expenses of $36,000 to be requested, and as a result, there is no need to reduce the forgiveness request based upon 75% of payroll costs. A side note, if non-payroll costs exceed 25%, then the forgiveness request is reduced until no more than 25% of the amount is forgiven qualified payroll costs. Next slide. The full-time equivalent employee rule, even though the small business had a PPP loan of $60,000, they only spent $36,000 on qualifying expenses. They met the 75% payroll rule, and the entire $36,000 is eligible for forgiveness. If the full-time equivalent employees after PPP funding 8 weeks is 6, the full-time equivalent employee pandemic was 10, then the ratio is 60%. So the amount eligible for forgiveness is $36,000 is multiplied by 60%, and the amount eligible for forgiveness is $21,600. In the end, the small business who received $60,000 loan spent $36,000 on payroll and other qualifying expenses within the 75% rule, but then had forgivable amount reduced to $21,600. They were only able to bring back 60% of their workforce. At the end of the 8 weeks, only 21/6 of the payroll will be forgiven, and the prepayment of the $38,400 to the bank would be necessary. That's the extent of my presentation at this time. Any questions?
Great, thanks, Terry. Allison, do we have any questions for Terry? Go right ahead.
We do have a few questions, and I just want to inquire, we've had a person say they lost audio. If you have lost audio, please raise your hand and let us know if there's been an issue. Okay, so we do have some questions here. One is from Renee that says, FTE counts full-time plus hours from part-time, not the actual number of part-time employees, correct?
Correct.
Great.
It's full-time. It's full-time equivalent. So if you have 2 employees that work 20 hours, that would count as 1 full-time employee.
Okay, great. And Terry, I'm not sure if this question is for you, but I'm going to ask it, and we can always put it on the back burner if necessary. But we have a question here from Joe that says, I thought we were going to have to shut down, so I applied for PPP and was approved. However, we were deemed essential and continued working. How do we move forward with the loan?
Just as if, even though you were essential, it doesn't matter. You kept your workforce and you're paying them, and for 8 weeks, that PPP is forgivable for those forgivable expenses.
Great. And we have a question here from Kelly. Could you please repeat the 2 date range options for calculation of full-time employees?
Sure, it's either January 1 of 2020 to February 29th of 2020, those 2 months, or it's February 15th, 2019 to June 30 of 2019.
Great. And we are recording this presentation, so it will be sent out if people want to, listen again to the presentation. We have another question here from Dennis. Dennis said that he has heard that the PPP can also be used for COVID-19 implementation costs. I'm guessing those are safety precautions. Is that true?
Those are not forgivable expenses that I know of. Now, that rule may change because the SBA is still coming out with its rules, but the limits on forgivable expenses are enumerated.
Great. Okay, and then we have one more question here from Sarah, and then I believe we can move on. So Sarah is asking, if more than 75% of the loan, say 90%, is spent on payroll, would 90% be forgiven? Yes. You have to spend up to 75%. You can spend all 100%. Great. And we did have one last question that I think fits here from Carlos. And Carlos is asking, can we offer employees bonuses as part of the PPP to reach the goal of making payroll forgivable? As long as the number of people is the same, yes. Now, doing the math, that's going to be difficult to do, but sure, that can be done. Great. Ian, I believe we can move on at this moment.
Great. Thank you, Allison. Thank you, Terry. Hang with us. We're now going to go to Paul Kapka from First Federal Lakewood. So, Paul, I'm going to get in here, unmute your microphone. Go right ahead, Paul. Take it away.
Hey, thanks, Ian, and good afternoon, everybody. And appreciate the introduction and appreciate Terry and your comprehensive initial presentation there on the nuts and bolts of the PPP program. So just a couple, I guess, disclaimers that all of us are I've thought about is, as Terry mentioned, guidance is forthcoming. Final guidance is due out, we think, today on some of the questions that have arisen. So the things we're talking about today are as the guidance exists today, but there'll probably be some additional guidance today or top of the week final guidance related to PPP, especially the forgiveness component. And just the overriding theme on probably all three of our presentations and discussions and questions is document, document, document. So on the expense side and everything that related to the program, we certainly suggest keeping accurate and diligent records to make your eventual interactions with the bank seamless and as quickly as possible, and also to generate the forgiveness component as quickly as possible. So I'm just going to highlight some of the items pertaining to forgiveness and what's forgivable, and just maybe some landmines to avoid. Don't want to overlap with Terry or with Will's presentation. So just on the first slide, the covered period was the important time to consider for the expenses to be utilized on payroll, and on the other 25%, as Terry indicated, is the immediate 8 weeks after loan disbursement. So that's the covered period, and that's the time by which you'd be required to expend the loan amounts on the payroll expenses and other expenses, as Terry had mentioned. The first slide that Terry talked a little bit about head counts, we'll move along on that. And the timing, again, the loan proceeds must be incurred and paid within the first 8 weeks. That's from disbursing of the loan. So not loan approval, it's the actual disbursement. Next slide, please. Thank you. So allowable uses related to payroll, again, up to 75% of the loan must be used on payroll. So Terry covered most of that, but just a couple things here. That payroll does include gross salary, wages, commissions, vacations, and sick pay. And just a couple tips here, again, reiterating the importance of documenting. Consider preparing a schedule of gross compensation for the employees, and just really documenting as accurately as you can. It can also include allowable uses are group healthcare costs, retirement benefit costs, and state and local taxes. So think about if your company is paying for retirement or healthcare, that those are included as part of the 75% as well. Now, as Terry mentioned, 25% of the loan proceeds may be used on non-payroll expenses. Certainly you could use 100%, but of the 25%, a little bit more detail here, that would include rent or mortgage for obligations that were in place prior to February 15th of this year. For real estate or in offices is part of the business, electric, gas, water, fuel costs for transportation related to business could also be included as part of the 25%, along with telephone and internet access. Final bullet point, interest payments for covered mortgage obligations related to the business could be part of the 25% as well, but not if you're considering prepaying those obligations. Thanks, Ian. Next slide, please. So again, just reiterating, SBA is super clear on this point. No documentation equals no forgiveness. So please be diligent there. Documents will probably mirror some of the documents that you generated at loan origination, such as your payroll reports, 941s, income, payroll, and unemployment insurance filings, and all documents related thereto. And any of the 25% expenses as well, you need to document that we just talked about, the interest, rent, utility payments, and things of that nature. So a couple things to avoid. Again, keeping all records sound like a broken record, but that's super important. Working closely with your payroll provider, accountant, whoever's keeping those records for you. If you do it yourself, that's great. Sure they're complete. 75% is key. We'll reiterate that that's important. That's the trigger for the forgiveness. And an interesting point, the SBA is requiring all submissions from your lender to be digital. So whatever you're providing to your lender for the eventual submission for forgiveness will have to be in a digital format. And minding the calendar is important as well. So try to expend all the funds prior to June 30th. Any portion of loan that's not forgiven then reverts into an 18-month loan. As of today, it's 18 months. That could change based on final guidance, but that's what we know today. At the 1% interest rate as well. So for the non-forgiven portion. So just a little bit of color before I wrap up. We're working with a third-party provider to track all the forgiveness components with all of our borrowers. So really a seamless process. Likely your institution is hopefully doing the same thing and making the records and documentation related to forgiveness as seamless and as easy as possible. It's absolutely critical for us to act as expeditiously as possible on the forgiveness request, but just know that your bank does have up to 60 days to forward the forgiveness request up to the SBA. So could be a little time lag there. I'll pause there for any questions, Allison or Ian, or from the group.
Okay, yes, Paul, we do have a few questions. So these are related to folks who maybe aren't returning back to work. They've chosen not to return. So we have a question here from Laura. One moment here. Laura and Joe. Laura says, our accountant told me that if an employee that we laid off does not return when we reopen and they offer them their job back, that we are not penalized for them not returning. Is that correct?
Yes, that'd be my understanding. That would be correct.
Okay, great.
Mm-hmm. As long as they're paid during the covered period, yes. Mm-hmm.
Okay, and then another question, and this may be for either Terry or Paul. Is it true that employees' tips that are done through the cash register can be considered payroll?
That's interesting. I believe, Terry, I'm going to say yes on that. I believe those are part of compensation. If you know differently, please chime in.
No, that's correct.
Mm-hmm. Yeah.
Great. And then I have another question here from David here. David says, the restrictions on my business were lifted May 15th, and we're preparing to reopen on June 2nd, but I received my PPP funds at the end of April. So how do they deal with that?
So again, the 8-week period would start upon the day the loan funds were dispersed. You have 8 weeks to spend 75% of the loan on payroll, whether you're furloughed, open, closed, or otherwise. I'm not matching up the dates exactly, but as long as those funds are expended within the 8-week period, you'd be eligible for the forgiveness component.
Okay. And then we have a question from Alice. Alice is asking if IRA contributions or contributions to retirement accounts are forgivable.
Good question. I know some of them are IRA specifically. This might be a question for Will. I don't want to. I would say yes, but okay. I defer to Will. Yep, for the type of return.
I believe the employer portion, yes, is included in payroll costs too. Yeah.
Thank you. So the retirement vehicle shouldn't matter whether it's a 401k, 403b, or IRA. I guess to clarify.
Right. That's my understanding as well. Same.
Thank you.
Okay, so I have a question from Kelly. If the PPP costs are accounted for in 8-week period, but FTE count is not counted until June 30th, how does that get reconciled?
June 30th. Good question, Terry. Would you like to chime in on that one?
Well, the forgiveness.
Go ahead.
The forgiveness will undoubtedly be recognized after the June 30th date. So you would wait until after June 30 before you do the FTE count, the calculation.
Okay, and then we have a question here from Jim asking, will QuickBooks documentation be sufficient as records for payroll and utility expenses?
Yes. So it's not required that you use an external auditor or a firm, but yes, to my understanding, we would accept those as a lender.
Okay, so I just want to point out, if someone has asked a question and I have asked it and we didn't hit the nail on the head, if you do need anything else, please let me know if you need more clarification. And again, the contact information for all of our speakers will be shared, so you can also reach out here in the future. So I'm going to hold for a moment with questions while I get myself back together here. And then I think, Ian, we can move forward.
Great. Thanks, Allison. And everyone, thank you for your question. I see them coming through, and there's a lot of great questions. Thank you, Allison, for coordinating all of them. That is no easy task, so I appreciate it. I also, before we go to Will, want to recognize County Councilman Dale Miller is joining us. And just so everyone knows, we have a really wonderful county councilman who's representing us well. And even with some small issues, maybe in the big picture, but they're really important to an individual business owner. When we've called Councilman Miller, he has stepped up and responded. So to the councilman, we appreciate your support. We're now going to move on to Will Costello of Laskey Costello. Will, go ahead and take it away.
Thanks, Ian. You can move to the first slide. So we've covered a lot of the topics in the beginning of my presentation already, but so I won't rehash or spend too much time. If you look, we've talked about the fund usage for a non-self-employed individual, meaning payroll costs, healthcare benefits, mortgage interest payments. This is for S Corps, C Corps, partnerships, or individuals with payroll. If we move to the next slide, though, something we have not touched on just yet is the owner compensation replacement portion of this. So there may be some self-employed individuals on this call who have either received PPP funds or plan to apply in the second round. Excuse me. And this PPP can be utilized for that owner compensation replacement, which is essentially replacing profits that you may have normally seen during this period had we not been dealing with the economic crisis of COVID-19. So that is something that can be considered as part of the forgiveness for the PPP loan, as well as the additional items that we've already touched on, which again, I won't belabor. We've already gone through all these items. If you want to move on to the next slide there, Ian. So something that I wanted to touch on that we haven't talked about yet is booking the loan. Gentleman brought up QuickBooks. It's not necessary that I have plenty of clients, and I'm sure there's plenty of businesses that don't necessarily utilize QuickBooks. But whatever your accounting and your bookkeeping software may be, it's important to book the loan properly to start and utilize all the items at your disposal to track your expenses. The loan is a short-term liability to start, so it is a loan. You want to track it as such by putting it as a short-term liability on your books. The entry to change that would be something that's done after forgiveness is determined. And so you want to start by tracking the loan as a loan payable. And I do recommend people that are utilizing QuickBooks or other software to possibly create a class. Class is just another way to track the expenses that are going to be against this PPP loan. So the expenses that you're booking in your books would be normal payroll costs and the things that we've already gone over, but you might want to add an additional item to them and put them under the class of PPP loan. It makes it a little bit easier to track the expenses for reporting purposes, and you'll be able to pull reports directly out of QuickBooks or any of the other softwares you might be using have different ways to class items. You might want to work with your bookkeeper or accountant, or if you don't have a bookkeeper, you might want to just reach out to your accountant and just ask best practice to kind of track this on your books and make sure that you're staying on top of it. Next slide. Tracking the expenses, we've gone over this. Document is the theme here. Again, keep good records. Use whatever tools you have at your disposal to track your expenses with regards to payroll, rent, utilities, the items to get this loan forgiven. Again, if you're dealing with a payroll provider or an accountant, communicate and make sure that they're aware. I mean, this has moved very fast, and that's something that may have been skipped. You might have received reports from your payroll provider, but it's a good idea to follow up with them and make sure that they know that you did receive the loan, and ask if there's any additional tracking that they can provide you, or is there any additional reports that they can provide you. You know, a lot of the softwares that are out there, or a lot of the payroll companies, have special reports to track this specific period, and it might help you to kind of get a hold of what you've spent to this point, and make sure that you're on top of getting everything forgiven. You know, I've had many conversations with clients asking them to call me or reach out to me at the 6-week mark before we get to the 8-week mark, to make sure that we're on track for forgiveness. I think that's important, to stay on top of this and make sure that you're watching things, and again, documenting everything that you spent this money on. Next slide, please. So the main portion of what I want to touch on is the taxability of the loan. The intention of this PPP loan was not to be a taxable item. In fact, the CARES Act provides that recipients of PPP loans are eligible for forgiveness to the extent the loan funds are used for certain payroll-related costs, rent and utilities, which we've already touched on. Also, under the CARES Act, it states that any amount forgiven will be excluded from gross income. So what does this mean? The PPP loan is not taxable income to the recipient. Now, that said, the IRS has come out with Notice 2020-32, and that notice came out on April 30th. And it basically states that a taxpayer is not allowed to deduct amounts allocated to income that is wholly exempt from taxes. So what does that mean in layman's terms? Basically, income that you've received that is not taxable, you cannot deduct expenses against that income. If you want to go to the next slide, Ian. So it's the way the IRS ruling is stated now, it's a backdoor way of taxing the funds, sort of. It's the expenses that you would incur during this period where you receive the loan, payroll, rent, and utilities. You're going to get that loan forgiven. Those expenses are not going to be deductible for tax purposes. And this is going to affect businesses in different ways. You know, your business structure really determines your taxability, and whether you're filing Schedule C or you're an S Corp, C Corp. So everybody's going to deal with this a little bit differently. Also, keep in mind that this is not, again, the intention of the loan. So the loan was essential for many businesses. We know that. There is, this is something that you want to have a conversation with your accountant, with your tax accountant, with regards to the taxability of the loan. Is it going to stay in place? I'm not sure. There's recent legislation that has been introduced to the Senate that would overrule this IRS notice. I think, again, the intention of the loan was not to cause tax implications for the recipients of the loan, but that's the way that the notice stands now. I guess, like we've touched on earlier, all of these items are subject to change. I think this is one that will, but I do think it's important to point out, and it's important to reach out to your accountant to make sure that you're on top of it. The last thing you want is to go through, you know, the forgiveness of the loan, and then from 2021 tax season, which seems a million years away, rolls around and you end up owing more tax than you anticipated. So planning ahead is very important with this. And again, stay in touch with your accountant to make sure that they're on top of knowing whether this is going to remain or if the law has changed. And with that, I think that concludes my portion of the presentation. I'll also open it up to questions.
Okay, great. So we have some questions that I think apply to Will, but may also apply to our other panelists. So I'm going to just start from the top and work my way down. So we have a question from Carlos. With the PPP having a deadline of 8 weeks of payroll from the time the loan has been deposited, however, the way my payroll lays out, it means that it will be 9 weeks out. Does this put me in the forgivable period?
to cover the full cost. I mean, the 8-week, again, as it stands now, I think there's a lot of businesses that are going to deal with the same issue. They received, there was a scramble to get the PPP funds. You received the funds, but you're not necessarily having a full staff and able to cover your full payroll costs during that 8-week period. There's a potential to change that, but as it's stated now, during the 8-week period, that's when forgiveness is determined, is that 8-week period. I don't know if either one of the other two presenters want to chime in on the same topic.
We just had a question whether this is accrual or cash basis also. That I don't think has been 100% clear. So I'm wondering if you couldn't accrue for those expenses within the 8-week period for expenses that are anticipated. Again, don't know. It's probably come out in the final guidance, but we anticipate that perhaps you could accrue for those expenses that are forthcoming.
Yeah, this is Terry. I have a feeling that this is going to be handled in the final guidance from the SBA. If a loan comes out in the middle of a 2-week period, what happens? I understand that some people are on a month payroll, some people are on a 2-week period payroll, and if it comes out in the middle of that period, will it be extended to cover a full 8-week period? And it may. We'll just have to see what the SBA says.
Great, thank you. So we have two questions that are somewhat similar, so I'm going to kind of ask them together. This is a question from Brett and Sarah. Can we give everyone an increase for their additional phone and internet usage from home right now? And then also, can home-based businesses get mortgage cost forgiven for the percentage of the home mortgage used for the business?
This is Paul. Jumping on the first part of it. Was it to be part of the 25%? The increased internet or phone usage? And the percentage of the domicile perhaps is a question for Will.
Yeah, I think that's something that will be addressed as well in the final guidance. The utility payments are typically, now if it's a self-employed individual and it's somebody staying at home, well then the portion of the utility costs that are utilized possibly for home office expense or just for the business, that is an allowable expense for the forgiveness. If you're talking about compensating your employees for their home usage for utilities, well, that's part of their compensation, so that would be part of payroll costs.
Great, thank you. We have a question from Laura. If we received in our account our PPP funds on April 20th, is it true we have to spend the funds by June 20th, or do we have until June 30th?
This is Paul. We're probably all saying the same thing, that the final guidance hopefully addresses these minor nuances. Again, whether you accrue for the expense, where there's an additional time period if it's in the middle of a pay period. So perhaps that's an answer that if guidance is forthcoming today or Monday, we could provide back to the group, or perhaps one of us could answer next week.
Great, thank you. So we have a question from William. As a sole proprietor and only employee, how do I show payroll? Do I just transfer the funds to my personal account?
That's the advice that I've been given to clients of mine that are self-employed. Because again, you're not necessarily on payroll. It's you replacing your profits that you would see at this point. But a paper trail and documenting is an important part of the forgiveness. So if you want to go as far as the fact that you have checks and you want to write yourself a check calling it owner compensation, you can do just that. But or the transfer from one account to the other. Again, documenting it is probably the number one thing that we want to talk about here. And it is in the 8-week period based on the PPP loan that you received.
Mm-hmm. Hey, Will, while Allison's checking on the questions, I know we have a lot coming through. If a sole proprietor does not have a payroll service, and they don't necessarily even have an accountant, I mean, maybe they talk to an accountant once or twice a year, what should they do? Can they get guidance from their bank? Who should they go to for guidance?
I would still say, I mean, if you have a tax accountant or somebody that you're dealing with, or an accountant that even you deal with them once or twice a year, I mean, that's a relationship that you still have. And I would start there about, you know, how you want to account for this money. Again, a bank, dealing with the bank, they've helped you receive the loan and they've helped you for the application. I don't know that they're going to help, and Paul can probably speak to that. I don't know. They're more processing the loans than advising on now what to do and how to pay yourself and those type of things.
Yeah, good question there, and certainly a bank can be a resource as well. We're having, again, a company help us with all the calculations, and we're part of a work group that has questions that frequently arise. So yeah, talking to your banker, although may not be able to give exact direction, can answer questions on best practices or things we're seeing throughout the industry. And we are more of a processing role than anything, but we're working through at our bank over 1,000 loans and with other folks, part of other industry groups. So we hopefully will be able to answer the questions that would arise for our customers. So it can be a resource is what I'm saying as well. Yep, be happy to.
Great, thank you.
Great. So we do have a question here from Sean. Since my business was not able to bring back any staff yet, will the 25% portion of the PPP loan for rent and utilities be forgiven?
Yes, even though you haven't brought folks back to work, if that's the question. So if you're spending 75% of the loan proceeds on compensation or more, then yes, the 25% spent outside of compensation would also be forgiven. I think I understood.
But if he doesn't bring back his staff, so would the utilities and rent be forgiven on its own, or would it have to be because they brought back the employees?
I think the general intent of this legislation was bring back your people. And the government really doesn't care whether they're working or not. They want the people to be on the payroll, and get off of unemployment and that extra $600 a week that the federal government's paying. So even though you're not having the people come into work, still bring them back, pay them, and the amount that you're paying them will be forgiven from the loan.
Great.
Yeah, I think
Thank
we can
you.
all agree that this is while it's intended for businesses to stay operational, there is this sidebar, which is, you know, a supplement for protecting unemployment for every state. So it's allowing those that are to get unemployment that need it, but also allowing businesses to pay their employees and keep them off of unemployment. I think we all three agree on that.
Agreed. Yep, well said.
Great. Thank you so much. We have a question from Eric. Eric says, I have an employee whose compensation is insurance coverage. Would that count as payroll?
Yes.
Is that health insurance coverage?
It does not say if it's health insurance, but let's go with that.
I mean, I would say probably. Yeah, likely. I mean, it's again part of compensation for that employee. So.
Yeah, health benefits would be included in the 75%. Yes.
Okay, so we have a question from Karen. Karen asks, how would a one-time bonus be converted into, quote, hours to count toward a full-time employee count?
How is the one-time bonus determined?
Karen, if you're listening, if you want to just shoot me a message, we can see if that comes in here. And so we'll put that one on hold for right now. So Joe was asking, can we reiterate a bonus to come up to the 75%? Is it really the case? So, should people be using bonuses to help them hit that 75% goal?
My understanding is that that is possible. Again, I think that's why I've told people, just because a lot of this is, we're still waiting on some final guidance from the SBA, but, my understanding is that is possible if you're not going to get there with, the calculation was based on your full-time employees for a certain period. If you don't think for some reason you're going to get there with that period, the full-time equivalence is going to impact that. But if you need to bonus out as well, that's a possibility. I don't know if Terry, you want to speak to if there's something different that you interpret there. But
this may come out in the guidance from the SBA also, but this is a question that's a case-by-case basis. Understanding that the computation is 10 weeks worth of payroll expenses. That's the amount that you get in the loan. The amount that you're spending is, the forgivable portion, is 75% of that over 8 weeks. So you take 10 weeks worth of expenses and you're spending it over 8 weeks, plus those other expenses, the rent, the interest, etc. So if you don't have any of those other expenses, you can spend 100% of that money on your employees, and it will be forgiven.
Yeah, good point.
Okay, great. So moving right along here. Okay, the next question I have is, if we cannot rehire the same number of employees as before because employees are requesting to quarantine still, and we can prove that, will the loan be forgivable?
Yeah, the SBA came out with guidance on this, and it has to be papered. You have to ask them to come back to work. They have to refuse to come back to work because of either they're quarantining themselves or they have a fear, etc. And then that person will not count in the full-time equivalency. So the amount will still be forgiven. Now, you have to be paying somebody, right? If they have a job, in order for the amount to be forgiven. They don't count towards the full-time equivalency, but still the dollars have to be paid to be forgiven.
Okay, great. We have a question here about 1099 employees. Kelly's asking, are 1099 employees eligible to be counted in FTEs?
Yeah, the answer to that is no.
No,
They're not.
Okay.
They have their.
Go ahead. Sorry.
They have their own. They have their own
Right.
ability to get their own PPP. They
That's
don't
right.
count for the business.
Okay. I have a question here from Joe. I still haven't received the loan, and June 30th is less than 8 weeks away. How will this work then? And I'm guessing that maybe fall under the, we're going to wait some SBA guidance on this.
Yeah, that's a good point. There's still funds available, so folks might be still applying and being approved and funded within that time frame. So I'm guessing when they did the first guidance with the first round, they weren't sure if a second round was forthcoming or what the time frames would be. So we would anticipate the date would be extended, but as of today, that's the hard date.
Right.
Great, thank you. I have a question here from Claire. If all employees are rehired and return to work, but their hours per week are reduced due to low production, are you penalized? For example, if employees were working 40 hours per week, but now they're working 30 hours.
Yeah, that goes into the full-time equivalency calculation. So if you bring back everybody and everybody's working half-time, your numbers go down to half for the full-time equivalency. So even though they're not working full-time, you should probably pay them as if they're working full-time to get the maximum amount of forgiveness.
Okay, great. Okay, so employees were called back to work when the PPP was received. One employee had taken another job. What happens if a replacement employee isn't found within the 8 weeks?
I think this is a question that's going to have to be answered by the SBA. There are going to be some issues with people not coming back if they got laid off and they got another job and it happens to be a better paying job. Tuffy, the amount may not, because you're not paying it, it just may not be forgiven and not be paid back.
Yeah, that's what I would say the same thing. Again, there's probably going to be final guidance, but you're not going to be paying that money out then, and you're going to have one less full-time employee, so that portion will not be forgiven.
Great. So I've notated this. This is something that we will try to follow up with the SBA and seek further guidance as we move forward through this process. I'm going to ask about 2 more questions here. I do want to say, again, there are a lot of questions on here. We will keep these questions as we can and try to get back to people. But we do encourage you to reach out to us or Ian with very specific questions, and we'll try to help you find answers to those questions. Okay, so we have a question. Is there any sort of thing, this is from David, if a partial amount of the 75% is used towards compensating your employees, is there any sort of partial forgiving, or is it 75% or nothing?
There is partial forgiving.
Right. Okay, last question here. Okay, so I have a question here from Peter. So as an owner of my business, and my partner and I take small weekly paychecks, can you clarify what we can take out of our additional dividends?
I would say that the calculation, when you receive the PPP loan, what was utilized to decide what your payroll costs were, that's going to help you determine what and whom you're paying. If you're both as owners on payroll, well, then you should pay yourself appropriately through payroll, and you'll be able to get it forgiven. Am I interpreting that question correctly? Do you guys hear something different?
Agree. No, logically I would agree. Mm-hmm. Someone might be demonstrating that this is ordinary course of compensation that you pay yourself in previous years, right? So it mirrors the same process that you've undertaken previously. There's probably more latitude there then, would be my guess.
Okay, I've got one last question to finish out our time together. And this is from Jim, and he says this may have already been asked in a different way, but since the PPP amount was based on 10 weeks or 2.5 months, but the accounting of costs will be on 8 weeks, how does this get reconciled? Do we essentially do an extra payroll check within those 8 weeks?
I would say as a general rule, you pay your employees what you're paying your employees over the 8 weeks. The remaining portion is for those other expenses as a general rule, but you can pay up to 100% of that PPP to your employees. But you must pay 75% of it to your employees.
Yeah, I would agree. It is based on an 8-week period, that's correct, but 2.5 times payroll. The reason that 2.5 times was thrown out there is it was an easy calculation to help. That other half times was to help cover rent and utilities and other expenses. But again, I agree with what Terry just said there.
Okay, great. Ian, I think we're all wrapped up on my end here.
Great, thanks, Allison. Great job. Thank you for doing that. Hey, Paul, I do have a question for you from the lending side, and then we'll wrap up.
Sure.
Say that the forgiveness isn't given, or at least not enough, and you have a little bit of a loan to pay back. Is there any way, even though it's 1%, the timeline is pretty short, and so it actually ends up being a fair amount of money that would be owed? Is there a propensity or capacity of a bank to help essentially work with the client to pay off that loan and then create or put them into a loan product that stretches out their monthly payments over a longer period of time, making it easier to repay?
Yeah, good question. And there's no prepayment penalty for the PPP, to clarify, so you can pay it all at once. That's a consideration that we would entertain to work with the customer, that if the payments, the P&I payments over 18 months is more aggressive than it's feasible, we'd be happy to work with that client, pay it off, and work on other terms on another facility. So especially with one of our applicants and a local business, that's something that we'd be happy to do.
That's great to know, because I'll be honest, just looking at our forms, as I'm sure a lot of folks on the call, when they looked at their forms, they were filling out the final loan documents. When you see the monthly payment, should you need to pay it back, it's a significant amount of money. So it's helpful to know that they could at least talk to the bank. Hopefully other banks would take that same viewpoint, but thank you, Paul.
Absolutely.
Okay, folks, so we're gonna wrap up. Please, here's my contact. We're gonna send out contact information for our panelists. We really appreciate their time and expertise in joining us. I know it's challenging that there still is a lot of guidance. Washington, D.C. Pushed a lot of things out. Unfortunately, didn't have the rules in place, and now we are all trying to figure it out as we go, which isn't helpful. So it's great to know at least we have these experts who are doing their best to learn the process and the systems and then push out the info as soon as it comes. Please reach out to myself. My contact information is on the screen, Patty Ryan at the Chamber of Commerce, or our friend Caitlin Milius, who is a planner with the City of Lakewood, relative to any specific rent relief or city-related programs. And we appreciate everyone's time. We did record this webinar. We will send it out, including contact information. So to Terry, Paul, Will, and Allison, thank you very much. To Patty Ryan, thank you for your partnership with the Chamber of Commerce. Everyone, we wish you the best, and please stay in touch. Let us know how we can help. We will work on getting questions answered for you. Have a great day.
Thank you. Appreciate it. Thank everybody for the time.
Thank you.
Thank you,
Take
Ian.
care. Stay well.